Everyone, to another GovReports webinar. Thanks for joining us. My name is Tony. I'm the Sales and Partnerships Manager here at GovReports. I appreciate you taking the time to join in. It's going to be a great session. We actually had close to 200 people registered for this session, so there's a lot of interest in what's happening in this space. Tonight I've also got Tiana and Sam Deep with me, who some of you may have spoken to previously as part of the GovReports team. They're going to assist me with any questions you have throughout the webinar. And of course, our presenter, Deb Thompson, who will be running through all the details of STP and Payday Super, which I'll hand over to in a few minutes. If you haven't heard of GovReports, just in case, we began back in 2010. We sought out to build the best cloud-based lodgement software on the market. Today, we're still building and releasing new features and integrations every month. We're approaching 5,000 customers in Australia, and that's a mix of tax agents, BAS agents, and direct businesses. We have an hour scheduled together today. We did have a similar webinar last night, went a little bit over time with all the questions, so we'd rather have too many questions not enough, so we don't mind if we run a little bit over time. We want this to be a two-way dialogue. So as we go through, please feel free to enter your questions into the questions panel, which is up the top right with a little question mark on it. We'll endeavour to get to those throughout the webinar. If we don't, we can try and have a bit of a Q&A at the end and aim to cover for those questions. The focus of today's webinar is, of course, Payday Super and Single Touch Payroll for accounting professionals. We've recently released our new Payday Super feature in GovReports, which obviously we'll be taking a look at tonight, as well as answering any questions you have about it. I'll shortly hand over to Deb, but for those of you who don't know Deb, she's a facilitator at ICB. She's also MYOB, QuickBooks and Xero certified accounting professional, and of course a long-time GovReports user. So without further ado, I'll hand over to Deb to begin the presentation.
Thanks, Tony. Wonderful to be here, and I do have to apologise because I know the date of this webinar got changed, and that was absolutely my fault. So I appreciate everybody who's here, and thank you for coming back. So I am going to assume today that because you guys are professionals, you may know a lot of all of this basic Payday Super information. So I'm going to go through it, but I'm not.
I'm just going to pause you there, Deb. Sorry, we've just got, we just had two people say they can't hear, but now one's saying all good. I can hear you okay. Have you got Deb okay, Tiana?
Yes, so if you can't hear, can you try to log in, log out and log in again? Perhaps that might work. Or
check your internet, try logging out and logging back in again, but we've got a couple of people coming now saying all good. So sorry, Deb, sorry to interrupt.
No, that's fine. But what I was saying is that I know that you are all professionals, and so as I said, I assume that most of you have been to your professional bodies and got a lot of this information already. Otherwise, definitely encourage you to go and talk to the professional bodies about this, but I won't labour necessarily all the points I'm going to make. So there's Tiana and me, but let's move on to what we're going to talk about. So we're going to talk about Payday Super, qualifying earnings, concessional caps and maximum contribution space, mention the small business superannuation clearinghouse that's going to close, and then look at GovReports and their wonderful clearinghouse and everything set up that they've got coming forward. So let's get on with it. Okay, again, there are lots of resources available on the ATO's website, so definitely encourage you to have a look at those if you haven't. As we know, Payday Super is going to change how and when you pay the employees superannuation if you're doing it for your clients, and it is from the 1st of July 2026. So our superannuation guarantee is staying at 12%. The difference is really what's happening is that now we're going to be working out superannuation on qualifying earnings. And the QE is now going to be a new term that we have to get used to instead of ordinary times earnings. The other thing that the ATO have called a qualify earnings day, and what that is the day that the wages are actually created and paid, and so that is going to trigger the obligation to pay the superannuation guarantee. And of course, we absolutely have to use single touch payroll enabled software, which of course GovReports is absolutely been doing great since it's come in. Qualifying earnings day, of course, does refer to the whenever the clients pay their staff. So whether it's weekly, fortnightly, monthly, doesn't matter. It's still going to be 7 days from that date of payment that it needs to be in the fund. So if we have a look at these days and say our payday is on the Thursday and we pay the super, we've then got 7 business days. And so in this scenario, Friday is day 1, but Saturday and Sunday aren't counted. And then if you have a public holiday on the Monday, then again, that also is not counted. So the Tuesday is day 2, and then we go through to the next week. Wednesday, Thursday, Friday, day 4, 3, 4, and 5. Then the Saturday and the Sunday again aren't counted. Monday is our day 6, and then Tuesday is going to be day 7. And of course, what is also happening that second Thursday that's on the screen, you're going to be doing another pay, or whoever's doing it, it's going to be another pay and another 7 days. So it's going to be a cycle that is going to be overlapping. There are extensions. So if you have a new employee, or the clients have a new employee, or the employee has a new super fund, there you are granted 20 days to get that information correctly into the super fund. There's also what they're expecting is out of cycle, things like bonuses being paid. If you're being paid fortnightly and in the middle of the fortnight, a bonus or a commission or something like that is paid. And what they're actually going to do is the 7 days is allowed to come from that next normal cycle. So you might have, sort of a bit of a few days extra if you're doing that out of cycle payment. And then of course there has to be exceptional circumstances are going to happen because we are Australia and we do have natural disasters. But there's also, they might grant extended times for things like communication technology if there's breakdowns or there's outages. Don't know quite how that's going to work, but for example, sometimes software doesn't work, and the commissioner may then grant some extra time. Who's included? Well, as we would expect, all of our employees, full-time, part-time, casuals, directors, closely held, under 18s, currently under their still normal that they need to work the 30 hours, the more than 30 hours in a week to get super. They have put a much greater emphasis on contractors. Are the contractors being mainly paid for labour? If so, they are definitely, saying you need to be paying super. So this is where clients really need to look at their staff and see if they are, going to have to include other people. Authorizations is one of the really huge things, in that authorizations will be required for each lodgement where money is going to be taken from the bank. So again, there has been some great talk around the town about how we're going to handle this. You can't use the STP 12-month engagement that you may previously do, or that your clients may do with you. You absolutely have to get an authorization each time. So you must have the employer approval for each payment. The annual standing authority, which has been around since STP came in, you can't rely on that. That is a different lodgement. And so you need to make sure that you do have a plan of attack to get that authorization. Then engagement. I would encourage you to think of having a new particular engagement letter or an addendum to your engagement letter, stepping out the process and having that process for how it's, who's going to be looking after what as far as payroll goes, where you're stepping in if you're going to be doing it, or where again, you may be doing the checking and making sure that you have that ready and signed before you start on the 1st of July. Also, as I said, I'm expecting you are around all of this, is that the late payment offset is disappearing as of the 1st of July. So if, for example, you have clients, which I have had clients who, they don't actually worry about the 28th of July to pay the quarter's payments. They pay it on the 30th of July and the 1st of August and think that's not a big deal, because with their superannuation guarantee charge, they've been able to use that late payment offset. This won't happen, and it's really important for them to be aware, because there is a cash flow issue, which I'll mention in a minute. But so they need to know that if they do that, where they pay a few days late for this quarter, for June's quarter, they won't be able to use that as an offset. So they will have to pay June's quarter again when they do the superannuation guarantee charge statement. And it's going to be used against what they pay. So there's a real chance of clients getting really mixed up and not being aware of what they've actually paid and what what is still outstanding. Penalties. The ATO have already talked about the sort of penalties that are going to be around and how they're going to treat people depending on how much the clients are actually trying to do the right thing and not getting it, or whether they're just going, oh, I'm just not paying, which we know there are always clients like that. So the ATO is now going to calculate superannuation guarantee charge statements, and they will be sending the notice of assessment. And I've had reaction from people who've said, oh, well, I won't worry about it because the ATO will take forever to find me. But let me tell you, they've already planned that the fines will be dearer if you wait until the ATO actually come and say, look, we see that you didn't pay this, and so now we're chasing you. Whereas if the clients actually own up in the first place, they can get the penalties reduced. So I find that encouraging to try and get my clients to pay when they need to. So that brings me to cash flow, because they don't have to pay the June's quarter until the 28th of July as previous. But it might mean that if they're waiting till July to pay it, and then they've got to pay the payday as well, then all of a sudden in this next year, they're going to pay 15 months. So do they have the cash flow? Have they even thought about the cash flow that they need, particularly for July, when they're going to have, all of a sudden, they're going to have the super that needs to be paid, if they pay weekly every week, plus they've got the 3 months of the June quarter. So that's just one of my things to try and get our clients to think about these things. Tiana, is there anything you want to ask me or mention?
No, we're all good.
Okay.
Thanks.
Thanks. So let's talk about qualifying earnings. And of course, the ATO does have sheets and check sheets and fact sheets that you can certainly give to your clients. And they are talking about qualifying earnings and super liability. And they're mentioning it again to remind clients that it's not just the qualifying earnings that you may be paying super on. So QE, the qualifying earnings, is going to replace OTE as the basis for calculation. And you have to remind the clients that they need to look at their awards, or again, if that's what you do for the client, look at the awards that are appropriate, or any industrial instrument or agreement that need to also be included into the superannuation. So sorts of things that are, as well as the ATO super guarantee, that you need to look at awards other legislation. So I believe there's some legislation in Western Australia about workers' comp and matters like that. So you need to check what applies to your clients. Enterprise bargaining agreements, if they have any of those, or if there's a company policy where everybody gets an extra 1%, or they say, well, if you go to jury duty, we'll pay you super anyway on whatever you get. Or if it's in the employment contract where one specific person has that in their contract that they get paid for something that normally people don't. So basically, qualified earnings is ordinary times earnings, and in most cases they haven't really changed very much with it, but I actually find that's going to be the trick, or it's going to be the thing that perhaps might trick people up, because they think, oh, it's just ordinary times earnings with a new name, and so they don't actually research and see what sort of things it may affect. Commissions, all commissions are going to be paid to the employee. Salary sacrificing, again, you know, where the clients go, oh, well, I don't pay super on salary what they've salary sacrificed. That hasn't been around for a long time. It's very important that they do it. And again, they're putting the emphasis on making sure that contractors who are paid mainly for labour are also included in the superannuation guarantee. The ATO publishes a lot of information. As I said, I assume your professional bodies will have all of this resources available for you as well, and be discussing this at the moment, because of course it is the hot topic, but you certainly can go to the ATO and investigate this information yourself. So currently that email address is there, that they actually have all this breakup of different, you know, does this have qualifying earnings on it or not? So I've just got a few screens for you just to see, but it's not all of them. There's all those ones that are available. So for example,
I've just got one question come in here.
Yep.
So if you need to pay super on things not award related, can those items count towards the MCB, or is it based on QE only?
Well, thank you. I will get to that. Can we hold that thought?
Perfect.
Because
I
will get to it. Okay, so qualifying earnings, as you see on this screen, pretty much everything that's there was OTE, but now it's qualifying earnings. That's an easy peasy one. We've got our director's fees, of course, and again, it gives you that you need to pay qualifying earnings, so you need to pay the super on any remuneration to a working director or even a non-working director. So again, you know, you're looking at closely held and everything. They need to, of course, have their superannuation as well paid. So an example here, Kim working at a call centre doesn't have an award that gives you what stipulated what their hours are, that there's no ordinary hours. So basically every hour that she works is OTE, and in this changeover it is now also qualifying earnings. So she will be being paid pretty similar to what she was. This one here is bonuses, commissions, and the reason that I've highlighted the yes there on that commission, previously it was commission performed entirely outside of ordinary hours, and for OTE it was a no, but it is a yes for the qualifying. And as I said, because there's not a lot of them, we really have to pay attention to these. Also, it's important to note the bonuses worked entirely outside of ordinary hours was a no, and is still going to be a no in this new system. So previously, if you've thought, oh, commission doesn't get it, bonuses don't get it, not a worry, that's not the way it works now. We've also got all the annual leave loading, that is about overtime, no, whereas annual leave loading, that is all the other sorts of annual leave loading where people are just getting it because of their award, then yes, it is getting it. So there's not a lot of variation to what was, but just enough for me to worry to make sure that I've got everything covered. This is another example, piecework, where again, there isn't an award or agreement that says what they should be getting. She's getting 15 cents a kilogram, picks 5,000 kilograms, or even he does, in a 30-hour week, and gets paid $750, which is more than the minimum in the horticultural award. So the 750 is ordinary times earnings, and again, it is becoming qualifying earnings, so they're going to receive their superannuation. Again, if you're dealing with somebody like this who is picking fruit, you are probably aware of all of those. But I would just encourage everybody to have a look and see if anything for their clients is affected. So now these next few slides are about individuals, not business, not really necessarily something for us to worry about, but this is where the concessional caps come in. So concessional contributions, again, it's related to the individual, not the business. And of course, it is all of the super that they get paid. So whether they salary sacrifice, their normal superannuation guarantee, if they put in any personal. This year's concessional contributions cap has gone up to $32,500. And again, it's on ordinary times earnings. It was previously $30,000, so up until the 30th of June, in a few weeks, it is $30,000. It's not our responsibility. It's not, even as agents, if we're working for the client and it's their business, it's really not their business to worry about it. It is the employees. They are the ones that have to be concerned, because they're the ones that are going to be paying tax, or their super is going to be paying tax on it. So then we come to that maximum contribution base. And it's really important to note that it is no longer quarterly. Previously, it was $62,500, I believe. If you paid in a quarter, you didn't have to pay any more superannuation above that. But now they have changed it to an annual basis. So you can't get away with that, because, like, for example, they got paid one quarter over the 62,000, the second quarter was under, then, you know, it could be a difference. So clients could be paying a little bit more superannuation than they were previously. And with that maximum contribution base, as somebody, what was the question again, Tony, exactly, please? I've lost you, have I?
Oh, I'll just read it for you. So if you need to pay super on things not award related, can those items count towards the MCB, or is it based on the qualifying earning only?
It's based on the qualifying earnings, and if there are things that are awards based, then they can still be required. So it's very important, again, to look at company policies and to look at awards, because they still may need to be paid. So again, I'm not an accountant. So obviously, if other BAS agents like me, we would be going to our accountants and checking this for them to give you advice. But again, the professional bodies may give you an answer to that directly. Then, as I said, these is individuals rather than business. So there is an exemption certificate that they can get. So if somebody is earning that, you know, 300,000 in the year, and they perhaps change jobs or something like that, they can, or they have two jobs. For example, maybe they have a sideline where, you know, once a weekend or something that they do some job, they can get an exemption certificate so that the second employer doesn't have to pay them any superannuation. But they need to make sure that they are going over that, that maximum contribution space. So the ATO are now saying that you need 30 days to get that before you intend to start. So for example, they've probably already run out of time if they wanted that exemption from the 1st of July. So they would then have to, you know, take it and say the 1st of August when they apply. But it is their responsibility. It has absolutely nothing to do with the businesses. It's not for them to encourage people to do it. It's absolutely up to the employees. Tiana, is there anything else we want to talk about at this point?
No, we're good, but we do have a questions coming in. It's from Chris, and the question is, there are some random clicks and knocks on the auto. Not too sure. That's not really a question. So sorry. We can. Not too sure what's the issues there. Perhaps it's the.
Oh, well, if I've got a jacket, I'll take my jacket off and see if that helps. Okay, so the Small Business Superannuation Clearinghouse, as we know, is closing permanently. And I love the time. You can use it up to 11:59 p.m. on the 30th of June. I definitely hope none of us will be working at that point, at the 30th of June, and we will get our clients at this time, if they're the ones doing it through the Small Business Clearinghouse, to make sure that they have downloaded the reports or made, you know, any instructions that they're making payments, that they do that well before the 30th of June. So as I have mentioned already, the ATO are still keeping that 28th of July for the June quarter for people to pay if they haven't already. I personally have been encouraging my clients to make sure that they start paying weekly, even if they're using systems that are just, you know, like they're just using another clearinghouse. But again, that's obviously they're running out of time at the minute. But the clients or your login will be disabled. So it's really important to make sure that everybody's aware and got all the information they want from there. So these are the instructions for downloading the employee information. That again, obviously will be very handy to make sure for whatever system they're going to be using next, to make sure that they have all that information currently up to date that is working, and to download the history. And one of the amazingly wonderful things, which of course is what we're here for tonight, is the GovReports is providing a solution. And to me, it's a solution that looks so easy to use, in the fact that if you're already using GovReports, it's just, you know, another button or so and a few reports to get. So I think it's really great. So it is GovReports and Super Choice is the portal or clearinghouse, whatever you want to call it, and it is going to be available for all tax agents or BAS agents and businesses who are using the IAM product to actually be doing it themselves and doing it directly, or for you to be doing it on their behalf. So with the GovReports, they're the hub, and what I like about it, the way I've been playing with it the last few days, is the fact that there's no need really to go into the employer portal. All of the information is coming back to GovReports, and you have the reports and the information and the status of what is happening without having to leave GovReports. I'm finding that very easy. So basically, if you're using GovReports, you prepare a single touch payroll, then you take that information and prepare the super payment from that. So again, you're not retyping anything. Then you submit that to the Super Choice, and then the Super Choice, which is the employer portal, they are going to then distribute it to the fund. If you're using the IAM reporting, the IAM STP reporting, or the IAM business, where people are actually doing their payroll within that IAM business, you enter the payslip and obviously you've done the pay. So again, that information then for the superannuation is coming straight off that, and you're preparing the super payment, and then again you're submitting that to the super choice and they are distributing. So as I said, I'm finding it really nice because it is all in that one place, and I'm only going to those same reports that I'm used to. You know, you're used to seeing GovReports, and so it's just going to be a very simple add-on while you're doing it. It is additional features within the STP reporting. So if you're doing GovReports, it's just from the STP reporting, and if you're doing the IAM, it's from doing the pay slips. You can, and this is again is for your client, it can either, the payment can be a direct debit, which is taken obviously directly from their bank, and this is where it's very important to have the process and the engagement authority signed with them, and you will need the authority every pay. Or the direct credit, where you're going to get a payment reference so that they can pay them. But again, I would imagine that we're all going to have to be on our client's back if they make that choice. And it is pay as you go, charge per employee. And when we get to the end, I'll get Sandeep or Tiana to some comments about that. And as I said, once I like everything, the fact that the reports are there and something that you're used to seeing. It is $1 including GST per transaction, and one employee doing their pay is a one transaction. So 2 employees paid fortnightly, it's going to be $4 a month for the clients. So then to set up, you know, this is sort of just basically what it looks like to set up the Super Choice Employer Portal. You are putting in, of course, the ABN, the client's name, the email address, the confirmations. Then you're going in that you have authority. So again, you need to make sure that you do have the authority signed by the client. And then you obviously, I hereby declare on behalf that you're going to provide information true and correct, something that we're already used to making sure our client is signing. Then all of their business details and the whoever is going to be the contact. The bank details, and again, it is either direct debit or direct credit. Why do you want a bank account for direct credit? Because if there's any refunds coming back from the super, from the portal, then there needs to be a place so that the money is going back directly to the client. So again, we don't have those, you know, any the issues for sort of anti-money laundering that you know, you're getting the money and give it back to the client. So this way, it's going directly back to the client if there's any money to be returned. And again, obviously, all of that information, and then you submit the registration. So this, to me, is really the only time that I've found so far that I need to go into the employer portal, because it's working and it's coming back to GovReports. So within the IAM, you are preparing the pay run, you're preparing your super payment, you're reviewing and authorizing, and then you're submitting. So a pretty straightforward thing, especially if clients are already using the IAM business or the STP reporting. They're already doing the pay run, they're already doing you know, all of the reporting, and these extra 3 steps are something that is, you know, part of Payday Super. So having a look at some of the screens with the GovReports superannuation payment, again, this is where you have lodged the STP for the client. And again, if you're already doing that for clients, you know that that process is pretty simple. What we now have under My Lodgements is a new category called Superannuation Payment Details. So we create this by obviously creating the STP payroll report first, and then once that is done, you go to My Lodgements on the side toolbar, you select superannuation payments, and then you create the super payment. So you'll see up on the right-hand corner, there's create super payments. That's what you click on. This is the screen that you come up where you pick what the client is and hit the create super payment again. So very simple, as GovReports is always giving you those, this is where I'm going, because it brings labels and everything for you just to click on. Makes it very simple.
Hey Deb,
So,
I'm just going to jump in there. Sorry to interrupt again. We've just got a few questions come in. Keep those questions coming, everyone. So they're great, actually. So we've got one here that says, you said the June quarter payment cannot be made using the small business clearinghouse, but the ATO said we can make the lodgement and payment in advance.
Yes, I mean, obviously, if you make it in June, so if you make it in the next 2 weeks, that's fine. The problem I've found with clients is sometimes, depending on when their last pay is, then you might, if it happens to be on the 29th of June, you're going to be really pushed tight to do it. And so I would be encouraging, if you can, to actually, do it early. It's just that and some clients are going, no, I'm not going to pay it. And I've had that one, I'm not paying it till I have to. Just be aware that they will have to have whatever they're going to use in place of it set up by July, which you'll need anyway for Payday Super, and you'll have to do it through that. So again, that to me is where sort of the cash flow issue is.
Okay, excellent. That's great. Now I'm not sure if this one's for Deb or not, but we've got here, can you use GovReports to lodge super if you are not using GovReports to lodge the STP?
Tiana, can you or Sandeep want to answer that one?
I believe yes. Sandeep, you want to confirm? Sandeep?
I'm sorry, I'm searching for I was on mute. Sorry, say that again. So like the question is like
can you use GovReports to lodge super if you're not using GovReports to lodge STP?
Yes, you can.
Yeah.
If you have a valid account. Yes. If you've got your government
valid account with a subscription and the credits, certainly you can do the super payment.
Amazing. And then we've got another one here. Can a client use BPay to pay? I'm assuming that's the
no, not at the moment. At the moment, it is only through the bank accounts, direct debit or direct credit.
Okay.
The direct credit is instead of the BPay, basically, to help them out.
Okay. We've got another one here. GovReports Super Choice Employee Portal. If we have 100 clients, does that mean we need to do 100 times for each client? Or does that mean? Maybe they're trying to say you need to do it for every client.
The payment is based on each employer. So under the employer, you can add multiple employees. But yes, if you have 100 employers, 100 submissions, separate submissions.
Yeah, you would have to report for them separately anyway. So the initial stage is that you need to register for that employer and to set them up, to get them set up with the banking details, whether they will pay by direct debit or direct deposit. Once you get them set up, subsequently you can just choose the generate the report and then get approval or the payments as accordingly. But you can't, like I said, if you've got 100 clients, you would have to do them separately for each one of them, as you do at the moment anyway.
All right, another one here. Does Super Choice only have an employer portal? Is there no separate tax agent portal available? As a tax agent, I've been lodging STP on behalf of my clients, and for that reason, I'm currently using GovReports. So I guess the question is there a tax agent portal directly with Super Choice?
Well, you are using GovReports. We give you the status of each of your clients' lodgements or payments to Super. We give you the statuses, so it's pretty much the agent's portal.
Okay, cool. Another one here. Let's say I finalize the very last STP for June quarter today, can I still submit and pay for June quarter via ATO Clearinghouse?
Yes, if you were paying it today, which is the 4th of June, then you have got enough time to do that. It's, you know, if you're doing the last wage on the, you know, the 29th of June, then I wouldn't necessarily be suggesting people, I mean, you've got time, but you really have to make sure that everything's done correctly and you can get it in there, because as it says, 11:59, 30th of June, it's you won't be able to log in after that.
Great. And another one here. So regarding the BPay payments, again, just saying their clients, a lot of their clients using credit cards to pay. I guess, will there be a BPay option at some point?
I believe Sandeep said, Sandeep, is there a credit card facility at the minute?
No credit cards.
Yep. So just straight up bank deposit at the moment.
For now, it's bank deposit. But I believe I asked the questions earlier on this, and it's likely maybe in the future, but at the moment, no.
Okay. Then we've got another one here. STP includes declaration each time when we do it. Would super payment declaration would be in the PDF so that we can get approval each time when we do STP and super payment?
So again, if they hold a minute for about the next 2 or 3 slides.
Oh, cool. Yep.
Okay.
All right. Well, I'm on top of the question, so we'll continue on for a bit, Deb.
Okay. All right. So as you'll see on the screen, the Prepare Super Payment Hub, it also gives you this information that if you don't use like I Am Business, where you're creating the payroll, but you're using GovReports, you have 3 ways of getting the information from whatever software, if you are using other software to do wages, into the system. So you can manual entry, you can import a CSV file, or you can, if you are doing the STP lodgement from them, then obviously the information is going to come from that STP lodgement that you're doing. So you do have those options of doing it. So you get a typical screen like this. Once you've put the information in, then you get the send for authorization. So you have obviously save as a draft, validate, and I'm sure you're very well used to using that validate or save and exit. So sending for authorization, as we mentioned, that you need to have that agreement and the client needs to be authorizing every payment, particularly if it's coming directly out of their bank account. So what GovReports have done, and again, this is a bit like if you are doing their lodging BASs for them, is that you have an email that is sent to them. It gives them the action required. It tells you the total payment summary that they need to pay for the superannuation, and it gives them the one-time number for them to come back and put that in to the system, or for them to then give you the number so that you can authorize it. And that also is a way of making sure that you have the proof that the client has authorized it, because they've received the number, and if they've given it to you, then they're authorizing you. But again, I would encourage you to have that process written down, and for the client to have signed that, yes, this is the process that we're doing. So again, just for the TPB's point of view, that everything is authorized. And then you've got this authorized super payment, which once the client's given you the one-time number, that you would then be able to go in and authorize that payment. So that's the way we're covering that the client is making sure that it is seeing the amount and making sure that it is approving the amount that is going to be paid. Then within GovReports, and this is all GovReports here, not the I am, you'll see that there is that super payment details, and it's giving you the status. It's telling you it has been authorized by client. Again, which I really like, because the reports are there are telling me at what stage is happening. And again, there is always the history like there is in all the other parts of GovReports, and giving you all of that information. Is there anything else, Tony, that we want to talk about at this minute?
Yeah, I've got a couple of questions come through. So this one says, if I have a new client who can't set up the super clearinghouse to pay, I understand that says 1-3/26 super, can I use Super Choice to pay it? But the STP was already lodged. How can I pay super at this stage? I'm not quite sure.
You can.
Be Sandeep's, I imagine.
You can, Tracy. So if you register for now, if you go into your GovReports account, register the client. So if you go to the client's profile, register them for super payment, and you know, whether they will be paying the direct debit or the direct deposit. So then when you prepare the superannuation payments, they would need to authorize for that payment to go through. So the answer is yes.
Great, thanks, Tiana. We've got another one here. So other STP software integrates superannuation with STP lodgements, allowing automatic reporting and payment processing at the same time. Does GovReports have any plans to support a similar feature where after an initial Super Choice setup, lodging an STP report would automatically report the superannuation data as well? Currently, it appears we still have to lodge through Super Choice separately.
No,
No.
well, obviously I haven't explained it correctly, because you're doing it, if you're, for example, you're doing the STP lodgement, you just now go to another tab that says superannuation payment from that information that it has gathered from your STP lodgement. Does that make sense?
I hope that makes sense. Yep, that's all good. And what have we got here? Do we need to send authorization for every single transaction or just one time at the beginning?
No, for every transaction. So if they get paid weekly, every week, you are going to have to send that authorization through, because again, money is coming out of the client's account. And again, we've got the whole anti-money laundering that is also coming in on the 1st of July 26.
Great. Yep, sorry, Tony.
All good.
And then we've got when will that super tab show up? Currently not showing, so I'm assuming they're asking when's it going to be live in production. I'll let Sandeep cover that.
We are releasing. Oh, sorry, I'm going to take over the highlights from Sandeep. We are releasing over the weekend. We just want you to finish the webinar today. Give you a little bit of time just to digest if you still need to revisit the webinar for any technical requirements. We will be releasing over the weekend, so that next week onward or over the weekend you can look into it and then compare with the notes or with the webinar. And so giving us a little bit of time to also start preparing for the help guide or the workflow. And also we are this weekend release, it is a beta version. So any feedback when you're using it, if there's any like suggestions, we're more than happy to get your feedback. We'll analyze that, and if we can implement or we can do it better, we will do so. But the final versions we will be on by mid-month of June.
Perfect. I've got another one here. If the client does not authorize by the time we do the Super Choice, for example, if they're overseas, does that mean we cannot lodge it? We need to hold it until the client does the authorization.
Well, it's it's the relationship that we all have with the TPB. That is the expectation in the ATO, is that it has to be within 7 days. So I would suggest, if they are going overseas, that perhaps they authorize somebody else within the business to authorize it for you. But yes, you need to authorize every payment.
Yeah, great idea. Another one here, direct debit requires mandatory authorization, but if we pay via BPay, can we proceed without the need for authorization? But I think we've covered off that we can't pay by BPay at the moment.
No, but if you pay by deposit, then yes, the client, you give the information to the client and then the client has to pay. The problem, I guess, for all of us, if we know our clients, do we trust them to pay it straight away?
Yeah.
Okay. Hope that covers that one, and then we're on top of it.
Okay. All right. There's one other thing too that I haven't mentioned. I don't believe I've mentioned today, is that this also works for SMFs. So they're private funds. So that will work as well for all your closely held people as well, if they've got their own super fund as well to do. So now having a look at the screens for the IAM reporting. Again, they're very similar screens that you're used to seeing if you've only used GovReports and haven't got any clients using the IAM business. Again, it's just a little bit different, but basically the same premise. And in IAM business, you create a pay run, and that pay run obviously has the superannuation on it. And so then again, you just go to the super payment. And in this, the button is on that pay run screen, and you just tick which people you want to do the super for and hit the super payment button. Then when you go to the next screen where you are wanting to send for authorization, you'll see the box up on the left-hand corner has an SP number. If you're going to be using, or the client's going to be using that credit, that deposit into the bank, then that number is going to be part of the reference. But again, you will get information about that if you're doing it. And then you send for authorization, and again it's telling you that there's one employee and the total amount, and again it sends for authorization. Now, depending on what your relationship is with the client, whether to do it, you can actually send the client the email, and they can obviously click in. If they click in normally into the IAM business, they can actually authorize it directly themselves. And again, then you don't need to have your authorization, but I would encourage you within your engagement to have the process that is about, that they're supposed to complete, so that again, you have all of those authorities for each payment. And then again, you have the screens providing the status. So this one here is pending authorization. So it tells you, that you're waiting for the authorization. And again, if the client comes in and does it, they can authorize it. But if you're having to send the direct debit and they're getting the one-time password, then they can give that to you for you to authorize it. Once it is, again, it's been authorized by the client, then you can submit. So as always within GovReports, it gives you, as you move along the status or what you have to do, the buttons are there to tell you what is happening, which of course I'm a fan of. And then in the end, there is the summary reporting, the super reporting. So you can get that super summary, and it is, in this case, this is telling you for the whole year, and it gives you all of the transactions. And so again, you can always go and be looking at this and reconciling, which is, such an important part of what we do. With the payment progress, so if you are using the Super Choice portal, then it takes about 3 days for the money to come out if they're doing the direct debit. Then the direct debit goes into the Super Choice gateway and they distribute the funds. Again, we know, of course, that it has to happen within 7 days. So again, that's the whole point of why these the Super Choice Employer Portal has been working, like all of the super portals have been working, to make sure that they can come up with that time frame that the ATO has specified. With the payment outcomes, once it's been sent, then if there is a failure, it comes back and tells you. One of the things that is supposed to be the great thing about this Payday Super is that we're going to know if there's a problem much quicker than previously. So rather than having money back to us from the clearing houses in 6 months, it's going to happen a lot more immediately, so that we can get onto it, and of course we can fix it. So obviously if it's successful, it tells you, gives you a confirmation receipt, that sort of thing, and the tax agent and the employer both are notified via email, and the payment is recorded. Then again, if it's failure, as I said, hopefully you get the information quickly so that we can jump on it. Because if we are doing it every 7 days and they are being paid weekly, it's something that is going to be generated. We're going to be busy working on it. And obviously, if some of you have 100 clients that you're doing it for, you're going to be very busy. Then I don't know whether, Tiana, you want to talk about how GovReports is going to do the charging, or Sandeep wants to.
Yep, for the agents, unfortunately, each time that you've lodged STP for your clients, we charge you on it. You can, charge your client back. But because you are lodging, you are paying for the clients for lodgements. But of course, the money is coming for the superannuation payment. That's directly from the client's bank account. But the lodgement will be coming from your account, your GovReports account.
So do you want to mention anything about the subscription that they need to make sure that they've got money in an account for?
Yep. So if you've got your GovReports subscriptions, whether it's the professional, it's the extent, the on-demand, or the starter package, the SDP lodgement is inclusive in most of the packages except for the on-demand. So it's as per normal, but for superannuation payment, each employee. So if you upload a file, a CSV file of say 10 employees, and you're lodging a superannuation for that pay run, unfortunately, it's going to be $10 for those 10 employees. Similarly, in the IAM, you now have the update menu on your subscriptions. So you will need to have the whether it's an agent's lodging. If the agent's lodging, it will be from, and you pay for the subscription. Then you would have to pay for the lodgements. If the clients pay for it, but they add you on as the tax agents or the BAS agents, then the clients need to have credits in their account in order for the credits to be debit from their account.
Okay. Well then, other than questions, I don't know if there's anything else anybody else wants to mention.
I'll jump into some questions. There's a few come through. So if we go back to, I have a client that only has contractors. Can I use GovReports or IAM to lodge and pay their super?
Yes,
Yes.
you can absolutely do it through the STP in GovReports, the STP reporting.
That's great. When will Super Choice be ready for us to use? So I think that was over the weekend. We're going to switch it on.
Yep.
Yep. So look out for that over the weekend. This one, just want to make sure you don't provide BPay payment method for Payday Super. Not at this stage, as I understand.
No, it's going to be direct. You can deposit. The client can be given a number for them to deposit it into the Super Choice account.
Yep, perfect. And then just to clarify, are the tax agents being charged the transaction fees for the super clearing transaction, not the client?
That's correct. So the tax agents or the BAS agents that's doing the lodgements will and it's from their account. So as I mentioned, whether you have your the professional, the startup, the extent package, the $1 per transaction or per employee will be charged from your account. So there is an options in your subscription page at the moment to do the credit top ups.
Okay, so it's essentially the account owner. So if it's the business owner that's got the account, like you said, they're going to add their tax or BAS agent, but it's the account owner is going to have those credits and will be paying the charges.
Correct.
Yep. Okay. Says, do we still pay if it's bank deposit? Well, I'm assuming so.
Yes. Yeah, they're still being charged $1 per transaction, because that's not for the banking, that's for the actual going through the employer portal and for them to distribute the super to the fund.
Yep. And we've got here, so we've paid for an annual subscription of GovReports, and then each $1 super payment we charge later. It's correct, yeah. So I think what Tiana's saying, if you've got, 3 of the 4 packages do include the STP lodgements, but you've got to pay extra for this particular feature.
And obviously you can then on charge to the client. So you could, again, from them, you could do it up front and have the money before you pay when you do the lodgement. That's my
exactly.
The one issue is why Tony is gathering the questions. The one issue that I've possibly seen and over the years, many of the agents currently providing the payroll services for the clients, where the clients do not get involved at all in the process. Now they have to with the superannuation payment because there's money involved. So at this point, the only difference is that you would still continue to do the SDP reporting, the payroll as you normally do. The extra steps that you would have to do now is that the client will have to, each and every time that you do the superannuation payment, enter the details, the clients need to authorize for the payments to go out of their bank account, or they have to make the payment. Right. So, like I said, that's the biggest hurdle that I would see some of you will have to face. Like I said, because and like maybe Deborah can confirm this. Many of the clients of the agents are not, technology savvy. They, you might have to help them to get it set up and guide them. They need to authorize, look at the numbers. Are you, like they're familiar with it? Discuss with them the figures beforehand. At first, the first few months, they will be startled a little bit, but over time, they've learned to accept. And because money is coming out of their bank account, they need to check those figures and authorize it.
Yeah, and again, that could be part of what process you get them to sign, so that you can talk them through it. Like, this is what's going to happen, and you're going to receive an email with the number, and you're going to ring me and give me that information. Or however, again, maybe you have your own portal where you talk to your clients, and you may say, well, this is where you're going to put this information so that I can then put it in and authorize it, and then it can go to the clearinghouse. But again, to me, that's where it's important to have this engagement and have the process that you're going to do, so that the client knows and you know, and the expectations are there.
Yeah, that's right. And I think we had this conversation before the webinar started about, ever since GST came in 2000, there's been a lot of changes to this industry, and a lot of it's, regulation driven. So this is just another change that is kind of forced upon us, but we have to just act accordingly and make those changes and be prepared.
And it's another service that we're getting to provide to our clients to make us more valuable to them.
There you go. That's straight from the expert. We've got another one here. So, any changes for salary sacrifice or voluntary super contributions? Can we pay randomly from GovReports when the employer wants to?
No,
No,
again, if there's a salary sacrifice taken out of their pay, that has to be paid as part of Payday Super.
Okay. There you go. Okay, that's all the questions. If you've got any, we are at past 6 o'clock, so if you do have any more questions, feel free to pop them in before we wrap up. Is there anything else you wanted to cover, Deb or Tiana?
No, I think I've covered everything, and as I said, I would encourage everybody to go back to their professional associations if they want more basic information about Payday Super.
Yeah, absolutely. Check your association, check the ATO website for the latest updates. We'll just see if any more questions come in, but in the meantime, thanks everyone for joining. We do appreciate it. We hope you got a lot out of it. If you are a GovReports customer, as we said, you will see that the new module of the Payday Super switched on over the weekend, so you can have a play around with it next week and give us lots of feedback. If you're not a customer, you can actually go to our website and trial most of our products, whether you're a business, a BAS agent or a tax agent. We've also got contact details on our site via phone or email, so feel free to reach out to us with any questions you have. We're happy to help. But speaking of questions, I think they've pretty much dried up for the night. So, yeah, okay to wrap up, Tiana?
Yes.
Perfect. Well, thanks again, everyone. Really appreciate it. Let us know if you have any questions, and we hope to see you again at the next webinar. And thanks, Deb, for the great presentation.
Oh, well, and thank you everybody for listening.
Thanks, Deb.
Everyone.
Thanks,
Have a
everyone.
good night.
Thanks.
Have
Bye.
a good night.
Bye.